Consolidation brings expansion. What does that mean? Well, it means that the market consolidates before it makes a move. As a trader, how can we use this information? Well, it tells me that if we're in an area where we're chopping and we're in kind of a tight little channel, maybe a tight little triangle like this setup here, that if we do break out of this consolidation level, I know there's a very good chance that we start to expand to either a pivot or we expand to a previous area of resistance and things like that. So you can see this setup here. The market opens, we chop, we chop, we chop, we chop. We're bouncing off this pivot point down here. We finally break out about 11:30 in the afternoon here out of this chop zone. And look at how we go from the 120s up there to the 280s. We got the VWAP there acting as support. We got the pivot point up there as a target. And how do I kind of look for this type of setup to play out? Really what I want to see is a confirmation of a breakout being like this breakout right here. And then I want to see what the trend obviously is up. We're trending up. We got this little bit of resistance right there. So I want to see what do I want to see? I want to see a bull flag, right? We just pushed off the VWAP. Something to think about here is that a lot of the really solid kind of good moves in the market normally start somewhere near the VWAP, somewhere near that volume weighted average price, because the market makers, the bigger guys, they're adding to their positions, they're buying there at the VWAP, they're looking for that next move up. And as you can see here, we break out that bull flag right here. We had this resistance there at the 92s. So there's our bull flag, the breakout through that high 93, 85 level. And look at this thing, just get you 100 points, just kind of waiting for that consolidation zone to break out. And a lot of times the market is going to be just in these channels, right? There's going to be a lot of times where the market's going to get stuck in a channel. It's going to chop around. And that's kind of like where these flags are so great, because you can identify this flag and be like, hey, if we break below the low here, I'm looking for a move down. This actually played out perfectly with the 15-minute opening range. 15-minute opening range is also kind of a great rule of thumb as well, thinking about consolidating. If we're inside of that 15-minute opening range here, you can see the 15-minute opening range. If we're inside of there, well, there's no reason for me to take a trade. There's an old saying in the market that you don't want to diddle in the middle. So if we're in the middle of a channel or the 15-minute opening range and all those different things, if we're in the middle there, there's no reason to play around with it. And you can see we broke from the hundreds down there, the 880s, a beautiful move. We then push back up here. All these little levels, all these little areas of like kind of consolidating and kind of these little areas where we push up, we kind of pull back and we sit in this level for a minute. This is from 1050 to almost for an hour. You know, we're inside this area for an hour, but then look, we break out, we push all the way up there. So every little area of consolidation, not that it always leads perfectly to a massive move, but the market has to kind of consolidate before making a move. You can see here another little area where we're kind of bear flag in there. Same thing. We're consolidating here. Look, from 38 to 54. So and then finally making that move down. You want to be looking for areas of consolidation. That's where you want to be kind of looking for a breakout. And from that breakout, that's where you want to be entering. You don't want to just be entering any area anytime. If there's no consolidation, well, there's probably not a very good setup to get a move. We can see here that kind of retest. This is also the 15-minute playing out, 15-minute opening range playing out here. It turns into resistance. You know, we chop around, we consolidate. We have some data come out here. Whenever you get this kind of pre-market data, 8:30 numbers, a lot of times these moves will get retracement before the market actually opens. You can see from 9:30 up to there, a huge move, a 200-point move back up just to retest that previous high. So just be always kind of asking yourself before you enter a trade, it's like, are we consolidating, right? Are we forming a flag? Is there a reason for me to enter a trade here? Just kind of going back and looking at these setups here that we're kind of trading every day. I mean, same thing here. That 15-minute range, again, it's kind of acting as a great spot to consolidate, right? The market's consolidating there, 15-minute range. We actually broke to the downside there, down to the 19,800, and then squeeze all the way back up here. And not every day is going to be a trend day. Another thing that you got to remember, not every day is going to be a good trading day. Some days the market's going to chop all day long and just kind of go sideways. See here another kind of very tight consolidation area. Again, that 15-minute range playing out there and getting a move. Not a huge move, but still getting a move down. And then the market kind of trending lower, hitting the VWAP there, making that move down. So going to the bigger time frame really will give you a better idea of if we're in a consolidation area. Did we consolidate overnight? Did we make a big move overnight? You know, these consolidation zones, and then there's that big move down. And that's where you want to be getting that move, getting that big meat of the move. This here 15-minute range breaks below 19,500 there and rip 500 points to the downside. And look what happened before it made that big move. It just kind of consolidated in that channel before making that big move. Yeah, I hate to say it, but I feel like the 15-minute range, it just makes it almost too, I wouldn't say too easy, but the 15-minute range really does give you a great kind of reason to look for kind of a breakout of that consolidation zone, right? When the market opens, we get the 15-minute range, and this happens every day. You can see the price action, you know, just kind of stuck inside that 15-minute range. We actually pulled back inside that 15-minute range there, and it gives you like an area to really kind of be like, okay, I can focus on this area as being a chop zone. I can focus on this area as being my setup for consolidation before that move either up or down. So being able to identify the consolidation before entering a trade is going to help you avoid a lot of those losses, because if you're entering, you know, once we've broken out, if you're entering after the move has happened, you know, if you get short after this candle breaks all the way down to here and you get short of the 461s after we consolidated there, well, guess what? After we make that big move down, well, maybe there's another chance that we start to consolidate again. Another channel forms. We start going sideways. And guess what? Look at that. Another channel. Deek, 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 deek. We got tight. We get the push up there. So being able to ask yourself before you enter a trade, are we consolidating or are we running towards a target? If we're already running, if we're already 30, 40, 50 points towards a target that I would have originally wanted to see happen with the setup, then that means I missed the trade. If we're not in that consolidation zone, if we're not in an area where we're forming a flag, then that means I don't want to enter a trade because I don't know for sure what's going to happen next. If it's consolidating, there's a chance we go up, there's a chance we go down, and we really want to wait for that breakout. We want to wait for that confirmation. So we try to identify the areas of consolidation. And I ask myself, like, okay, if we are consolidating here, okay, if we're consolidating, what happens if we break to the upside? We got the VWAP up there. Okay, it's from the 500 up there to the 18,600. I actually posted this on Twitter just the other day, this exact setup here on Friday, this idea of getting back above, you know, the wicks of these candles, like wick. So if I see the wicks of those candles kind of getting taken out, and you can see they get taken out there, well, there's my setup back above the 500. Those whole numbers, 500, 600, 800, whatever it is, those whole numbers are always going to kind of be an area to kind of focus on. I think there's something to be said about those whole numbers acting as support, acting as resistance. And again, the consolidation here, being patient every day. There's going to be setups, but the problem is, can you be patient and wait for those setups to play out? Sometimes the setups don't play out till later on in the day, and that just is how it goes. So you might miss out on the move, you know, in the later in the day. But hey, as long as you avoid taking a big loss just because you're trying to enter a trade with FOMO, then who cares? But waiting for that consolidation is going to give you a much better entry, better risk reward, and a better overall reward as well, because you're entering a trade at a pivotal level where if we do break, you know, that consolidation zone, if we break it, we know there's a good chance that we move down and give us a great overall risk reward. You can see from the 570s down there to the 400s. So about a 170 point move after just waiting for the 15-minute range to open or the 15-minute range to break. How amazing is that, right? Like, it's kind of I don't want to say like bulletproof, but it really does force you to wait, be patient, and then look for that breakout. And then that's my opportunity to make money. If the market is consolidating, that's when I want to avoid it. If the market is about to break out of a consolidation zone, the better, the longer that consolidates, the more consolidation there is, the better the chance that there is a big move to happen. And that's when those, those runners, that's when that big risk reward play can really come in, and you can get that 5-to-1. You can get that, risk 20 points to make 100-point type setups. And it really comes down to being able to wait for that consolidation to break, wait for the flag, wait for the 15-minute opening range, wait for the pivot point, VWAP, whatever it is. Being able to wait for those setups are going to give you much better risk reward.